Hey guys, it's Derek and Lindsay here. We had a question when it came to understanding a little bit of the lingo when you go to buy and sell stocks. So Derek's going to walk us through some of that vocabulary and maybe sometimes when it would be appropriate to use each of these types of things.
Now before we hop into it, if you're new to the channel, make sure to turn your phone sideways and smash that subscribe button. It helps grow the channel. Also hit that like button to help us out with the YouTube algorithm.
Let's get started.
Now that you've smashed that like button and hit subscribe for future content, let's dive right into it. We're going to use my account, my rollover IRA, just as an example. This is Vanguard's view of it. Now, the verbiage is going to be identical regardless of where you're at. The ordering and layout might be a little bit different. So the order types that you need to be aware of, at least listed here, are market, limit, stop, and stop limit. So a market order is essentially an order to buy or sell a security immediately. This type of order guarantees that the order will be executed, but does not guarantee the execution price. A market order generally will execute at or near the current bid for a seller order or ask for a bid order price. However, it is important for you as an investor to remember that the last traded price is not necessarily the price at which a market order will be executed. So these ones I highly discourage placing after hours, meaning when the market's closed. If you're going to be doing that, I would recommend you just do a limit order, which we'll get into next. If the market's trading, then you could do a market order to get closer to what you actually see the price at. So leading into the next one, that would be the limit order. So this is an order to buy or sell a security at a specific price or better. A buy limit order can only be executed at the limit price or lower, and a sell limit order can only be executed at the limit price or higher. An example, let's say you as an investor, you want to purchase shares of ABC stock for no more than $10. You as an investor could submit a limit order for this amount, and this order will only execute if the price of ABC stock is $10 or lower. That leads into the next one. So a stop order, also referred to as a stop loss order, is an order to buy or sell a stock once the price of the stock reaches the specified price, known as the stop price. When the stop price is reached, a stop order becomes a market order, which it would then immediately execute at the next price. That leads into just a little bit more detail on this. So a buy stop order is entered at the stop price above the current market price. Investors generally use a buy stop order to limit a loss or protect a profit on a stock that they have sold short. A sell stop order is entered at a stop price below the current market price. Investors generally use a sell stop order to limit a loss or protect a profit on a stock they own. The last one on the list that we're going to talk about is the stop limit order. These are very similar to a stop loss orders, but as their name states, there is a limit on the price at which they will execute. There are two prices specified in a stop limit order: the stop price, which will convert the order to a sell order, and the limit price. Instead of the order becoming a market order to sell, the sell order becomes a limit order that will only execute at the limit price or better. This can mitigate a potential problem with stop loss orders, which can be triggered during a flash crash when the prices plummet, but quickly recover. So that's the last of the order types here, but I do want to give a few terms that you'll probably come across in your trading. So the first one is all or none, abbreviated as AON. So this type of order is essentially important for those who buy low value stocks like penny stocks. An all or none order ensures that you get either the entire quantity of stock you requested or none at all. This is typically problematic when a stock is very illiquid or a limit is placed on the order. For example, let's say you want to buy a low value stock and you want to buy 2,000 shares of, let's say, ABC stock, but only 1,000 are being sold. If you indicate you only want an all or none, you will only purchase 2,000 and not the 1,000 there. If you don't indicate that, you would potentially purchase the 1,000 shares and leave 1,000 unfilled. The other area that you'll look at is immediate or cancel, IOC. This type of order mandates that whatever amount of an order that can be executed in the market or at a limit in a very short time span, often talking about just a few seconds, be filled and then the rest of the order canceled. If no shares are traded in that immediate interval, then the order is canceled completely. The other one that you'll find is fill or kill, FOK. This type of order combines an all or none order with an immediate or cancel specification. In other words, it mandates that the entire order size be traded in a very short time period, often again just a very few seconds. If neither condition is met, the order is canceled. The other thing that you'll run into are durations. So here we have day. If you're placing limits or bounds on the order, this one will be good for the day only. This will apply to a limit. If that limit doesn't reach and execute, then it will cancel at the end of the day. Same concept with GTC, which is good to cancel, in this case 60 days. It will be good for 60 days with that limit. If it does not execute and purchase, it will then be canceled. I hope you found these helpful. These are just a few tips that you'll run across. If you have any questions, make sure to leave a comment down below. Now that we've gone through the order types, those are all the ones that you really need to know about to get started buying an ETF or a stock. If you have any comment or question, leave it down below and we'll get back to you on it.
Thanks so much for watching, you guys. Don't forget to hit that like button and subscribe to our channel.